the filing status. Now, this is an important concept because this is something which is very different from our country to what happens in the US, right? In India, as I told you, every individual has to file their own return. Nobody is filing the return as a joint couple. But in the US, there is an economic incentive for getting married and you have an option. So there are a couple of, so even within individuals, there are 5 categories that you can use. So remember, there are 5 categories, but there are 3 tax slabs. There are 3 tax slabs. So what are these tax slabs? We have single. So what do you mean by this? We have 5 categories, but 3 different tax slabs. Before I go there, I want to show you. Okay, let me first discuss this. Then what we'll do is I'll show you the actual tax slabs to figure out which one is most beneficial and which isn't. So we have single. Now, single and married filing jointly, we understand. But what about married filing separately? What is this head of household? And what is this qualifying surviving spouse? So, even as an individual, you have 5 different marital statuses or 5 different statuses which will give you economic advantage or which may not give you as much economic advantage depending on which status you are choosing. And this is something which can change year on year. So, every year when you file your return, you'll have to determine which is your status. So, what are these 5 statuses? Now, first, let's understand single versus married filing jointly. The first thing I want you to be very clear is birth and death are not prorated in the US. Now, what do you mean by this statement? If somebody is born, so US has calendar year end, okay? That's you have to understand that US has calendar year end, which means what? Any person who's filing returns in the US has to report the income from January to December. India has fiscal year end. We take 1st April to 31st of March. In the US, it's calendar year. So irrespective of whether a child is born on 1st January or on, let's say, 30th of December, that child would be written as a US. So if I'm taking dependency exemption for that child, or if I'm taking any credits for the child, I'll do it for the full year. Let's say if you're married on 30th of November, I will still get the benefit for the entire year. You will not prorate it saying that for say 11 months I was single and for 1 month I am married filing joint. You would not do that. Okay. So please understand that we don't prorate birth or death. So what are these returns and how is it applicable to us? Now, first of all, the fact whether you're going to be filing as a married filing jointly couple or you're going to be filing as single depends on single day. So in the US, there's this concept of getting married in LA. So imagine people go out to celebrate the New Year celebration in the US. Last day of the year before the clock strikes 12, they're married. So if that happens, they will still be allowed to file a married filing jointly return, even though for 364 days and let's say 23 hours you were single. It doesn't matter. On 31st of December, when the clock strikes 12 on legal paper, are you married? If yes, you will get to file a married filing jointly return. So on the last day of the year, are you legally married? If yes, if you're staying with your spouse and whether you're alive or dead for the whole year. I'll tell you why is this relevant. Just hang on for a moment. Sounds very creepy at this point of time, but it doesn't matter whether that person is dead or alive. The remaining person, the person who remains, or so generally if a married couple is there, they would be filing a joint return. Even if between the spouses, one spouse dies during the year, and if that person would have been alive, they would have filed a married filing jointly return. Still, the couple or the person who's a surviving spouse will go and file a married filing jointly return. So if you're married, or if you would have still went ahead and filed a married return in case even if the spouse dies, then the return which is supposed to be filed will have married filing jointly status. If you're not married, then of course you're single and you will be using the single tax slabs for the US return. If you're married but you're not staying together, then the question that comes is on paper, is your divorce through? So if you're married but you're legally separated, then also you're going to file a single return. Okay? But if you're married but you're not legally separated, then you will not file a single return. You will still be allowed to file a joint return. So single thing is very simple. If you're married on the last day of the year, you file a married filing jointly return. If you're legally separated or if you're not married, you will file a single return. Even if one spouse dies, the remaining spouse in the year of death can take the married filing jointly return. So you will see that in order to prevent certain hardships, there are some filing statuses that can be assumed, or some filing status can be taken just to ensure that some unnecessary hardships can be avoided. So we will see what it means by being a qualifying surviving spouse. But at the moment, remember, in the year of death, the surviving spouse files a married filing jointly return. Now, there are two things that I want you to remember here. One is, okay, if it's a married filing jointly return, please remember same-sex marriages are also legalized in the US, and you can file a married filing jointly return if it's a same-sex marriage. Second, both the parties, the moment you file a joint return, both the parties become jointly and severally liable for the joint liability of both of them. That means, unfortunately, let's say if you're married to a person who had a huge debt to IRS in the earlier years, you were not aware, but you got married to that person. Will you be liable to undergo and pay the debt? The answer is yes. Then even your income can be attached to pay the debts of the spouse who was for which you do not know. So please remember, the moment you're married and you're filing a married filing jointly return, you undertake the liability of both the parties. So be very careful before you file a married filing jointly return. You need to know whether the person you're marrying is not having any past debts, because your income can be applied to recover those past debts. Now, in certain cases where there can be a fraud, you will see that there are certain relief that is given to the spouses. So generally, what happens if you're a married filing jointly return, everything has to be paid together. But in certain cases, if you're duped, how? We'll talk about it. So two scenarios. There is a separate paperwork where you can say, let's say I was not aware, or I'm an injured spouse. So there's something called innocent spouse relief and injured spouse relief. In both the cases, the spouse whose relief will be granted will not be liable for the spouse's share of problems. So what are the conditions which differ between injured and innocent spouses, and when can you take this relief? The one that I just told you, the couple got married, but this marriage happened because of trickery. Why? Because there was a guy who was in debts. He got married to a girl, let's say, who's really rich. And the idea was to dupe her into marriage so that a lot of my past debts can be settled. Now, in this case, the person who was not aware of the past debts can claim from the IRS that I'm an injured spouse. I was not aware that this was a scenario, and I don't want my income now to be attached to repay his, the debt. If that happens, and if the IRS agrees, then what you get is an injured spouse relief. When that happens, you would not be. So, in that case, what has happened? All the income has been used to settle the past IRS debts. And now you can claim a refund saying, see, you've already used my money to pay that person's debt. I was not aware of it. So please give me back my money. So that refund can be possible if the IRS accepts your injured spouse plea. So what you have to do, you have to file Form 8, and definitely you should have been filing a married filing jointly return in order to claim the injured spouse relief. What about innocent spouse relief? Innocent is when there is a crime that has been conducted, and now you are saying that you are not a party to that crime. So what happens? There is an understatement of tax. Now, when you go to, let's say, part 3, so you will have to, refer to part 3 for this. Okay. So please refer part 3 for this. So when you go to part 3, you will see that if, let's say, for any year, I short pay my taxes, then I'm supposed to be liable to the IRS. So now this is what is happening. There is an understatement of tax. So what happened? I married a person, and that person was unethical. So what he did, he claimed a lot of deductions. He claimed a lot of income. So there were income that he was generating, and he did not report it. So in all of those cases, there was an understatement. But the fault was not mine. The fault was of that person. And if I can prove it to the IRS that, see, this penalty should not be applicable to me because I'm not a party to it, I was duped into it, and I was not aware of it, and I can substantiate it, then the IRS can give me an innocent spouse relief and not ask me to pay the penalty for the understatement. Okay, so the first thing very clearly is, remember, injured is when your money was utilized for paying the past debt of somebody. So you got injured because you lost your money, and now you're applying to get the refund. Innocent is you have underpaid the taxes, there's a liability, and now you're claiming the IRS to absolve you of that liability. So one is a refund, another is a payment. Okay. So in this case, either when I know I've discovered that the person that I've married to is a criminal, and I want a divorce. So when I'm in that state and I can prove that we are in the process of getting separated, I can tell the IRS that whatever is the understatement is his understatement, don't get me involved in the process. Okay. And anyways, if I can substantiate that whatever has happened is not my fault, is the fault of the spouse, then in that case, there can be a separation of liability. So in this case, the IRS can split and say, okay, your part, you are responsible, her part, she is responsible. There's a separate form for this. That form has to be filed. So remember, again, what are we studying? Single versus married filing jointly return. Who is single? Single person means I'm not married, legally separated, single. Married filing jointly, last of the year, you're married. In that case, it's a married filing jointly return. Even if one of the spouses dies, in the year of death, it is married filing jointly. The exception is generally whenever you're married, you will get to file for joint returns and you are jointly responsible for all the liabilities. But there are two scenarios where you can claim either an injured spouse relief and claim refund for the money or an innocent spouse relief. Okay, so this is as far as married filing jointly, single are concerned. Now we go to the next topic. What happens if you're married filing separately? So you're using the joint tax rate. So you're using the joint tax rate, which is the best and the most effective rates in the US, but you're splitting it into two. So two people who are married, but they're saying the IRS that I am married, but I am not attaching my name with that person's name. Okay. So think about a scenario when the spouse is getting married for the first time and the spouse needs to be very clear that I don't want to be attached with your return because I don't really know your background. And just to be sure, both the people agree that for the next couple of years, they're going to be filing separately. Is that allowed? The answer is yes. Or let's say if I know that my spouse is an antisocial person, and even though I'm married to that person, I don't want my financial records to be messed up with his financial records. So I can file a married filing separately return. But the biggest problem with this return is that IRS wouldn't want you to do that because in that case, the entire purpose of creating a married filing jointly incentive gets defeated. So yes, they've kept the option of married filing separately, but they've made it very clear that don't use this option. How do I do that? I say I pull down a lot of credits, a lot of advantages that I give to married filing jointly if you are married filing separately. So it is an option available, but there are a lot of disadvantages. There you don't get to earn certain credits, which may be child. And so when you go to the credit portion, you will see you will not be able to earn all of these credits. You will see for the others, maybe you have to earn more amount to file your return. If you're a married filing separately couple, you'll have to file your return the moment you earn $5 as your income. So we have made it very harsh for the taxpayers to report is married filing separately. We have made it economically very difficult for them. So we have given you this option just to keep your name aloof from the spouse whom you think may not be the right guy or the right girl. But we have asked you specifically not to use it. It's in extreme rare circumstances that we use it. How? By pulling away all the benefits that I'm giving if you are a married filing jointly. Okay, now there are two more statuses. Remember, status and tax rates are different. Why? Because you already know that for married filing separately, I don't need a separate rate. I will just take the married filing jointly rates and I will divide it by 2. Now, there are two more statuses that are available in order to avoid undue hardship. Now, what do you mean by that? Imagine a scenario where A is married to B. A dies. B, so A was earning more. And the breadwinner of the family dies. B was earning significantly less. And they had a child, let's say, who was an 8-year-old child. Now, what is happening? Suddenly, B has a financial burden to keep the house rolling, to keep the child studying, and all of that. But at the same time, if B would not, so we know that in the year of death, not an issue, we know in the year of death, B will pay less taxes because B will file a married filing jointly return. But what will happen subsequently? Because we cannot suddenly jump in and start working, right? So in order to avoid undue hardship, for 2 years following the date of death, that means in the year of death, I give you the advantage. And for 2 years following the year of death, if you can substantiate that you have a child or a dependent whose money you are paying and for whom you're maintaining the house, then I will let use the benefits of married filing jointly rates. So what is a qualifying surviving spouse? You are a person whose spouse has died and you have a child who's dependent on you. So both the conditions have to be met. You must have a spouse who died and you have a child who's dependent on you. In that case, please remember it is not applicable in the year of death. So not applicable in the year of death, because in the year of death, you are going to file a married filing jointly return. But for 2 years thereafter, for 2 years subsequent to the year of death, if you have a dependent child, you can use married filing jointly rates. So you will see that there is something called marriage. So the rates are different, most economical for married filing jointly. So just to prevent undue hardship, I just don't want to increase your tax burden because you have a dependent child and you lost your spouse. For 2 years subsequent to the year of death, if you have a dependent child, you can say that your status is qualifying surviving spouse and you can take advantage of married filing jointly rate. So see what we did? We did single, we did married filing jointly. Now we don't need a slab for married filing separately because it is half of married filing jointly. We also don't need a slab for qualifying surviving spouse because the rates used will be married filing jointly rates. Okay. So first thing is, please remember that you must maintain your house for the whole year. So if you're wanting to claim a qualifying surviving spouse status, for the entire year, you will have to claim that the child was your child who's dependent on you. And how would you prove that? Because you've maintained your house, which for the entire year was a principal place of residence for your dependent child. Now, what do you mean by that? Can I send a child to boarding and say that that person is a qualifying surviving spouse? The answer is yes. If you were the guardian and if your home address was given as a home address of the child in the school. So in that case, for the entire year, you have maintained a house which was a principal place of residence for the dependent child. Please remember this child. Now, okay, the definition of child in the US is very loose, guys. Okay, they don't just say it's your blood child. They will include your adopted child. It will also include your brother and sister. They're regarded as your children. The children of brothers and sisters are also regarded as children. Okay, so they're very lenient with the definition of child. And in the EA papers, they're not going to question you on the definition of child. Okay, just remember, we say brother. So child means your child, your adopted child, the child of spouse that you've married. See, in the US, it's more common than in India to see people getting divorced and then getting remarried. And when you get remarried, then the spouse's earlier child can also become your child. Okay, and even for that child, you can claim a qualifying surviving spouse status. Now, there's something called a foster child. Anybody has any idea what's a foster child? So let's say there was a child who was at child abuse, who was facing child abuse from an abusive father. Let's say mother is not there, abusive father. So the state takes care of that child and gives him in foster care. And you can become a foster parent to a child like that. Okay, so those foster children are specifically excluded in the definition of qualifying surviving spouse. So this is something that I want you to understand because this is the only area where a foster child is excluded. Okay, so remember again what we're doing filing status. So on your return, you can file as single, married filing jointly, married filing separately, qualifying surviving spouse, and as a head of household. Single married is very clear, 31st December, single married filing separately clear, but we don't want. So we discourage. Qualifying surviving spouse, remember in the year of death, it is married filing jointly. 2 years subsequent to the year of death, you can have a qualifying surviving spouse status, provided you must have maintained a house which for the entire year was a principal place of residence for a child who is dependent on you. Child will include you, your child, your stepchild, your adopted child, but it will not include a foster child. Okay. Now, when I say maintaining a home, what do you mean by maintaining a home? We'll talk about it. But before that, let's talk about what is an HOH status. Okay. So the next status available is head of household. Who is a head of an household? Now, somebody who's an HOH cannot claim a single MFJ. So the others definitely will not be possible. Now, one thing is very clear. If you're a non-resident alien, I will not let you take advantage of an HOH status. So this status is not relevant for a non-resident alien. So who is the head of our household? Somebody who's either single or legally separated or in the process of getting legally separated. So this kind of a spouse is called abandoned spouse. Spouse who was married, but for the last 6 months of the tax year, the spouse has not been staying with the spouse. So we say, okay, you're in the process of getting legally separated. So three things: either if you're single or legally separated or an abandoned spouse, you have an option of claiming something called an HOH status, which is head of household. You can say that I am a head of an household. When, sorry, head of, okay, this is household, okay? When you're single, legally separated, abandoned spouse, and you're also maintaining your home or a household, which is the principal residence of somebody for more than half of the tax year. Who is the somebody? Somebody must live with us. Who is the somebody? The somebody may be a dependent child. So this is a concept that we're going to learn on Saturday. What is a dependent child? What's a dependent relative? But if it's a dependent child, that dependent child has to stay with you for more than half of the tax year. If it's a dependent father or a mother, the dependent father or mother need not stay with you. So what do you mean by that? So let's say I'm a single person. Okay, I'm a single person. I'm taking care of my mother. Okay, let's not say let's say X is a single person. Okay, so X is single, has a mother who has Alzheimer's at a very advanced stage, and because of that, the mother has to be put to a nursing home where there is a better care of taking better provision of taking care of that person. So I am paying the entire cost of the nursing home. I am the person who's the guardian of that patient, and I am the person whose house is regarded as the house, which is the address for the parent who's in the nursing home. So we say, okay, just because that person is not staying with you and that person is your father or mother, can we say that you cannot take the advantage of a lower tax rate? We say no. Okay, if there is a dependent father or a mother who is staying in the nursing home, let's say. So what do we say? If it's a mother or a father, you don't have to stay with me. Even if I'm maintaining a house, which is your principal residence for more than half of the tax year, I would still qualify you as my dependent and I'll claim as an HOH status. Now remember, an HOH status cannot be claimed for a friend. So imagine if there's a person who goes to the US and that person has a very close friend. That friend also goes and stays with the person in the US. The person in the US is earning, and the friend is studying, let's say. Now remember, in HOH status, even if you're maintaining a house for your friend, even if you're maintaining, paying for all his stay and everything, even in that case, you cannot claim an HOH status for that individual who's a friend. An HOH status has to be because of blood relationship. So only for a relative, but that relative has to stay with you for the entire year. That relative must have lived with you, okay, for more than half of the taxable year, actually. Okay, so this is more than half. It's not for the full year, guys. It is for more than half of the taxable year. So for the dependent child must stay with you, for a relative must stay with you. Dependent father or the mother need not stay with you, but you have to maintain a house which was your principal residence for more than half of the taxable year. We will do questions on this, don't worry. But as of now, understand 5 statuses and what is the provision for applying each of the status. So for a qualifying surviving spouse, for the entire year, you must have maintained a house. For a qualifying child who's staying with you, you're maintaining his house, and the spouse must have died in a year. So for 2 years subsequent to the date of death, provided you have not remarried, you can claim that person as your dependent. HOH, I have to maintain a principal house or a residence for a dependent child who has to stay with me, a relative who has to stay with me, but father or mother need not stay. And I must be either single or legally separated or an abandoned spouse. Only in that case can I claim an HOH status. Okay? So what do you mean by saying I'm talking so much about? So there are two terms, right? One is maintenance and another is support. Okay? By maintenance, I don't mean giving support. Okay, so I'm not talking about giving clothing, education, life insurance, vacation to the person. I'm saying I'm maintaining my house for you. So that means I'm paying the property tax, I'm paying the interest, I'm paying rent, electricity, upkeep, repair, all of this. I am maintaining the house for you. Okay. Okay. Now this is a very important concept, guys. Okay, because this is a concept that keeps on under, and this fundamental change a couple of years back when Tax Cut and Jobs Act got introduced. Okay. So imagine there's spouse A and there's spouse B, and they had a child C. And now these spouses are separated. They are no longer together. The question is, and okay, now let us assume that A was a student, person who is earning more, and according to the divorce decree, A has to give child support. Okay, what do you mean by that? That means whatever is the cost incurred for sustaining C, that cost to some extent will be borne by the A. So the child's education, child's stay, all of that is being met by A. So some amount is being given by child support. The question is, who will claim C as a dependent on their return? Will it be A because A is paying all the cost for this education and everything? Or will it be B because C is staying with B? Who will claim? Because you know that in this case, if neither A nor B remarries, both of them can claim an HOH status because they are single now, because they're legally separated. And at the same time, they're having a child who they are maintaining. So who will be able to claim the child on their return? Now, earlier they used to say that, see, whoever is earning more, let that person claim the child on their return. But now they've changed it and they said, no, please see who has the custody of the child. Who is the person who is staying, who for with whom the child is staying. It doesn't matter who is providing the child support, who is taking the cost of upbringing of the child. So we say the custodial parent has a right to claim the child as a dependent on their return. Okay, but can that so? But let's say B is not working. B has no income. So can A come and request B and say that, see, you are supposed to basically claim C, but since you have no income, there's no benefit that you will get. Can I claim C on my return? And B says, okay, I don't have a problem. So what does B do? B files a paperwork and gives over the right to claim C as a dependent to A. So again, what we are doing, A, B are married, now separated, have a child. Law says that anybody who has custody of the child can claim the child as a dependent on their return. So in that case, what I did, I'm supposed to take C as a dependent on my return. But B is not working, there's no income. So A comes and approaches B and says, can I claim C and my dependent on my return? B says, okay, I don't have a problem. B relinquishes that right and gives that right to A. So now who is claiming the child as a dependent on their return? It is A. Can A now claim an status? The answer is no. Ed status is dependent on the child's maintenance of home. And who's doing that? It is by the custodial parent. So now I'm reading the C. A custodial parent, in my example B, who has released the right to claim the dependency exemption on the non-custodial parent. So I am not claiming C as a dependent on my return. You can claim C as a dependent on your return, which is A. By filing paperwork, which is Form 8332, may still qualify for HOS status. So I am not claiming C as a dependent on my return. But if I want, the HOS status can be claimed only by B and not by H, because technically A is not maintaining a house for C. So remember, even if I give up my right for dependency, I will still retain my right of claiming the HOH status. And conversely, if a parent who's a non-custodial parent, he or she can claim the dependency, but still can't claim the HOH status for the child. Is this clear? Anybody, any questions? Is this clear? Is the concept clear till now? There are practical questions. Just wait. We will discuss it. 1 second. Naveen, for which one did you answer a no? Unmute. Hello? Naveen, are you there? For which question did you say no? Do you have any question that no, or do you have a problem in understanding? Can you please unmute and tell me which concept? Okay, my suggestion is let's take the practical questions. Once we understand the questions, it will be easier to go back to this. Okay, 1 second. Okay, just wait on. Okay, okay. First, okay, let me first take you through some questions. Okay, then I'll go back to 1 or 2 slides back. Okay, first question, go slow and then answer the question. Jerry, so the call of the question is what is the filing status which will give the lowest tax rate to Jerry? Okay, Jerry is a 37 years old person. His wife died during the current year and he has not remarried. His deceased wife had no income. So there is Jerry, there is Jerry's wife. Jerry's wife is no more. Jerry has 2 minor children. So 2 children, child 1 and child 2. who's living with him. Jerry paid all of the costs for keeping up his home for the tax year, and he has paid for all of the support of his wife and of these children. What will be the filing status for Jerry in the current year? Can anybody tell me? What will be the filing status for Jerry in the current year? So I have 5 statuses. I have single, I have married filing jointly, I have married filing separately, I have qualifying surviving spouse, and I have head of household. So in the year of death, one second. Yeah. So remember, in the year of death, we are going to file a married filing jointly return. But the same question, if I would have told you next year and the year thereafter, next year and the year. So in this question, in the year of death, we are not going to be swayed by the data that is given to us. In the year of, no, Sakshi, this is the year of death, right? In the year of death, please understand, we don't prorate death. If the spouse would not have died, Jerry would have still went ahead and filed a married filing jointly return. In the year of death, it will be married filing jointly. 2 years after the year of death, did you remarry? The answer is no. Did you have children or a child whom you are supporting? The answer is yes. If it is for the entire year that you're providing your house, which is the principal place of residence for the child, then you can claim qualified surviving spouse status and you can use the joint married filing jointly tax rates. Okay. Naveen, are you clear with this? Is this clear? Naveen, I can't hear you. Is this clear? Sakshi, is this clear? Sakshi, is this clear? Okay. Yeah. So follow me. So we have understood qualifying surviving spouse. We've understood married filing jointly. Okay. Now let's go at this question. Who would not be a qualifying person for purposes of filing as head of household? So who is a head of an household? Somebody who's single, married, file legally separated. So I'm single, but I'm taking care of a dependent child who's staying with me for more than half of the tax year. I'm taking care of a dependent parent or father or a mother, but that person need not stay with me for more than half of the year. But I should be maintaining a house which should be his or her principal residence for more than half of the year. It can be a dependent relative, but that relative has to stay with me for more than half of the tax year. Only then can I be qualified as head of household. Okay? Only then can I be qualified as head of household. So they are saying, who is a person who would not be a qualifying person for purposes of filing as head of household in a tax year? Your mother, whom you can claim as a dependent. So your mother can be claimed as a dependent in my return, right? Your mother can be claimed as a dependent in my return. Okay? One second. Yeah. Your adopted child who lives with you is married and can be claimed as your dependent. So if I have my child who's living with me and I'm claiming the child as a dependent, I can claim that person as a HOH status also. Your foster child who lived with you all year and is your dependent. So now remember, only qualifying surviving spouse excludes the foster child. Otherwise, everywhere, every child is included. Your aunt related to you by blood, but she does not live with you, but is your dependent. So what do you mean by saying is your dependent, but is not staying with you? So there is an aunt for whom I'm paying money so that that person can survive, but that aunt is not staying with me. So this is a relation, but for that relation, for you to claim an HOH status, that person should have stayed with you for more than half of the tax year. Since that's not happening here, since that person is not staying with you for more than half of the tax year, you cannot claim that person, and for that person, you cannot take the HOH status. Naveen, is this clear? One second. Naveen, unmute yourself. Is this clear? So single, married filing jointly. Clear. Married filing separately. Clear. Qualifying surviving spouse, not in the year of death, but 2 years thereafter, provided you have also maintained a house for the entire year for a qualifying child who's dependent on you. What is HOH? You're single. So basically you're alone and you're taking care of people. Why are you not able to unmute? Now unmute. Then I suggest you log off and then, yeah. Naveen, can you hear? So Naveen, I think there's something wrong in your speaker because I can see that the speaker option is unchecked. So now if you're not able to speak, then my suggestion is log off and then relog in. Yeah, so please log off and relog in. There's something wrong at your end, okay? Okay, now go slow and understand this question. What is ease proper filing status? What is proper filing status? M and E were married, but they got divorced on 1st June of the current year. That means 1st of June, they're legally separated. Their one minor child lived with E for the entire year. So there is a child who is minor and that person is staying with E for the entire year. Worked all year and provided more than half the cost of keeping up the home for herself and her minor child. Signed Form 8332. So basically, E becomes a custodial parent and M becomes a non-custodial parent. The law says whoever is the custodial parent can claim the child as a dependent on their return and can also claim the HOH status. Now see, signed a form in order to release the claim for exemption of the child. That means now the child is being claimed as a dependent on M's return, allowing man to claim their child as a dependent on his separately filed return. What is E's proper filing status? What could be the filing status for E? What will be the filing status? No. See, what does the HOS status says? HOS says, what is the requirement for HOH, guys? It is not support. It is staying with you. The child is still staying with you for more than half of the tax year. The child is still staying with E for more than half of the tax year. So E can now claim an OH status. E can claim an HOH. Please remember, guys, the HOS status cannot be claimed by the non-custodial parent. Even though the dependency can be claimed by M, but the HOH status would still go to E because the dependency says that the child must have maintained the home for the dependent child for more than half of the tax year. So in this case, remember this is an exception to the rule that the child has to be dependent on you. In this case, even though the child is not dependent, because you're not claiming the child as a dependent, but since you're maintaining the house, which for more than half of the tax year is the principal place of residence for the dependent child, for the child, you can still claim the HOH status. This is what was meant by the provision that I had stated earlier. Is this clear? Please remember, just because the child is being claimed as a dependent in M's return, M will not be able to claim the HOH status. It will only be E who can claim the HOH status. Sakshi, unmute yourself. What did you not understand?
Hello, ma'am.
Yeah,
It
yeah.
just got clear to me right now. You just said like just because Matt is claiming all the expenses doesn't mean he will get the HOH status because he is not providing the home. Elena
Yes.
can get the HOH status even though she is not claiming all the
Yes.
expenses because she is providing the home.
So the provision says that you should have maintained a home which must be the principal residence of the child for more than half of the tax year. Is that clear? So that condition is being
Yes,
met
ma'am.
by, so only E can claim the HOH status, not M. Okay? Naveen, are you able to unmute? Because I can see that your icon says it's unmuted, but I cannot hear you. Do you want me to wait for 2-3 minutes? Please go out and then relog in. Okay, 1 second. I want to take you. Okay, now look at these tax slabs. Naveen, if you are able to unmute, let me know what is your question. Okay? Hello? No, I can still not hear you. I think there's something wrong with the speaker that you have. I can still not hear you. So please write your question in the chat panel. Let's see if I can answer there. Okay, now look at the tax slab, guys. Remember, MFS would be half of MFJ's and HOH is a separate return and qualifying surviving spouse will use the married filing joint rates for 2 years after the year of death in case if there's a dependent child for whom you have maintained a principal house for the entire tax year. If you look at the tax slabs, okay, you will see that very soon for single filers, the tax rates would increase from 10 to 12%. But if you look at it, the incidence will be the lowest for married filing jointly returns. So ideally, you will save most taxes by filing as married filing jointly return, because the highest tax slab will be hit at the end, and at the same time within there is more gradation for lower tax rates than the others. Single are the worst actually. HOH is somewhere between single and married filing jointly is HOH. Okay. I've already spoken about abundant spouse. So even if you are in the process of legal separation and you're not staying with the spouse for at least 6 months towards the close of the tax year, and if you're supporting somebody, you can still go and claim the HOH status. What's a non-resident alien spouse exception? See, when a married taxpayer spouse is a non-resident alien at any time during the year, and the election of choosing as file as is not made, so that person is still a non-resident alien, then that person, see, then the taxpayer is considered unmarried. So basically, if you're married, you remember the provision that we spent left for non-resident alien, the spouse is getting married, getting into the US. Now, if you are still going and claiming a non-resident status, that means you are not filing a married filing jointly return. See, the person is still claiming, and so in this case, even if you are married but you are a non-resident alien, then you cannot go and file a married filing jointly status. But the person who is now in the US, this person can still go and claim an HOH status because you're married but you're not claiming because your spouse is a non-resident alien. In that case, you can go ahead and you can file as an HOH. Is this clear to everybody? Okay, so remember what we did so far. We've spoken about who is supposed to pay tax on what income in the US. We have spoken about the filing statuses. There are 5 filing statuses, but only 3 tax rates: single, married filing jointly, married filing separately, qualifying surviving spouse, and head of household status. Single and married filing separately, the difference is on 31st of December, 12 o'clock. Are you married or are you single? If you're married, it's married filing joint. If you're married but divorced, then also it's single. If you're married but towards the last 6 months of the tax year, you're saying separately, then again you can claim a married filing jointly status if the two spouses wish to do so. Qualifying surviving spouse is never applicable in the year of death. 2 years post the year of death. So in the year of death, you will still go ahead and file a married filing jointly couple if you've not remarried. But 2 years after the year of death, if you have a child, dependent child whom you're supporting and for whom you're providing the principal place of residence for the entire tax year, you can claim the qualifying surviving spouse status and you can use the married filing jointly rates that is applicable. If you are single, legally separated, or an abandoned spouse, and if you're maintaining a house which is a principal place of residence for a child who's staying with you for more than half of the tax year, or a relative, please remember it has to be blood relative, not friends, who's going to be staying with you for more than half of the tax year, or a dependent father or a mother, but that person need not stay with you. Remember, the only provision is the dependent parent need not stay with you. Then you can claim an HOH status. That's it. Is this provision clear? Anybody? Any questions? Anybody? Any questions? Naveen, I don't know. I'm still not able to hear you. Whatever you're speaking, I cannot hear you. Okay, so if you can write your question in the chat panel, I think I will be able to answer your question. Otherwise, I would move it. 1 second. HOH is not clear. Okay, HOH. Okay, follow me. Do you have a question? You wrote no to something. Okay, no, not to have any questions, is it? Okay, HOH is what, Naveen? HOH is I am single, but I'm maintaining somebody. Now, that somebody can be a child. See, understand that for QSS, if I want to take a benefit, I have to prove that the person died. My spouse died, right? HOH means I am single or I'm not filing with anybody. But at the same time, I'm taking the burden of a relative or a child or my parent on me. And in that case, how do I say that? I say your house should be the principal place of residence of the child for more than half of the tax year. And that child must be dependent on you. And the child must have lived with you for more than half of the tax year. Even if it's a relative, it's the same thing. But for a dependent father or a mother, that person need not stay with you. Why? Because if that person is in a nursing home, but that person is being supported by you and your house is the principal place of residence, apart from the fact that that person is a nursing home, you can still claim the lower tax rates by filing an HOH status. Is this clear or no? Then in that case, if there's any specific query, then you let me know. Okay? And remember the custodial versus non-custodial parent. It's only the custodial parent who can claim the HOH status, never the non-custodial parent. Even if the dependency is being claimed by the non-custodial parent, but the HOH status can only be claimed by the custodial parent. Okay, so that is as far as filing status is concerned. Okay, now I have a question and I want you guys to think and answer this question to me. A and B married, A dies, B remarries. What will be A's filing status? So you will see in the US, A and B are married, A dies, B marries C. B will definitely file a married filing jointly return. Now, A, you will see in the year of death, there will be a final 1040 that will be filed for A by the estate of A or by the beneficiaries of A. What will be the filing status for A in his last return? Can anybody tell me? What will be the filing status? Okay, yes. This will be very good, huh? By the way, this will be, see, remember this cannot be married. So, had B not remarried, A would have been married filing jointly because A and B would have, because B would have filed a married filing jointly return with A in it. Now, this problem is no. So, okay, look at this. In this situation, why will A file as single? Because A was married at the time when A died. A and B were married at the time when A died, right? A and B were married at the time when died. So this is a unique scenario where the IRS allows or mandates A to file a married filing separately return. This will be married filing separately return because you were married at the time when you died, right? So you cannot be claiming as single because you were married. Naveen, is this clear? At the time when A died, A was married, right? So you would have been allowed to file a married filing jointly return. But now since B had remarried, you cannot file a MFJ. So there would be a married filing separately returned that would be filed for A who is no more in his last return. Okay. So we completed the no, tax rates are not same in married filing separately and single. See, if you look at the tax rates here, married filing separately will be half of married